Yo, what's up, YouTube? It's Mr.BuyTheDip back here with another video. I'm going to be talking over something I made yesterday, and as you can see, 7:28 p.m. March 2nd, 2025 is when I made this presentation, when I made these notes. And just going down and showing you how that correlates to today. Okay, I said high volatility in GameStop. Okay, what happens to GameStop? Still gets smacked down. What happens to Nvidia? Down 8%. Okay, I want you guys to realize, if you're a long-term investor, here's where you kind of start question yourself. Tariffs are something that needs to be talked about. Okay, these are basically goods being taxed that are from different places in the country. Now, whatever happens goes. Okay, I want you guys to realize that we recovered from a dip back when Nvidia came all the way down to about 112, 115 after the DeepSeek AI stuff, right? And then we saw a glimpse of 140. Okay, I kind of do not like this volatility, I'll be honest. Okay, Nvidia's to the point where, I could really day trade this. I could really swing trade this, because I'll probably make more money swing trading this than trying to hold on for long term. Okay, if I'm really being surgical, you can make more money swing trading Nvidia than just holding for long term, right? I might switch that up. So next time we go to 140, I'll have a vision of selling all my position and taking that, and then waiting for a big dip down to even 120, because that's very possible. We can see the stock. This was just at 140. Okay, not even a month ago we were at 140. Okay, to take at least a week out, right, and we see 129, then we see 114. What does this tell you about the stock? It's so easily influenced, and that's always not a good thing. Okay, but if you're a risky investor, that is an amazing thing for you, because what you can do is you can turn money in, turn profit in at the right time. If you buy at the dip right here, 118, you get a nice flip on your money to 124 and sell right there. Okay, so if you're a midterm to short term, you're a swing trader, right? Nvidia is one of those ones you need to have in your portfolio. Okay, now I talk about safer investments, Walmart, SPY, and Reality Income. Okay, always have safe investments, and this is where you buy S&P 500. I'll be extremely honest. This is exactly where you buy the S&P 500. There's no other better time to buy the S&P 500 than right now. I mean, I don't see a more attractive price than 582. Just a week ago, we hit all the way up at 596. We saw a glimpse of 613, a new high. So what does this tell you about the S&P 500? When it goes back up there, you could potentially sell, right? Take that money, take that profit, wait for a big dip, because the dip is always going to come. Do not chase it. Okay, I saw 598 right here, then I saw 598 right here. I was like, dang, I thought that was the time to get in. Okay, and really, a full few days later, I see 612, and I'm like, oh my god, this ETF is, it's really going now. And then boom, we see 589. So kind of see a trend and pattern through these stocks. Okay, be very transparent to yourself, and just analyze your stocks, whether it's on CashApp or TradingView, right? Look at the chart patterns. I want you to see these big red candles and ask yourself, if I want to get in, right? If I'm a day trader, do I want to see this pattern right here? Do I want to see these big, these big bearish candles? No, you hate the look of this. But what does this bring right here? This down here brings entry. This brings your entry right here. So if you were looking to get in today, you can get in at 512, right? And probably hold this for a few days, turn it into a swing trade, and sell all the way up here at 120, 124. So be very surgical, but you have to realize, have safe investments, okay? Now, risky investments offer potential for higher returns. Nvidia is, I would say at this point, Nvidia is a riskier investment than a safe investment. Let's be honest. Let's be real brutal, guys. I'll be 100% honest. Nvidia is not anymore a investment where you can just set aside money and say, I'm going to keep dumping money into this, because I really think in the next 5 years this is going to do great. If you're a beginner investor, right, without a lot of technical analysis, you're going to be scared. You're going to be fearful when you see Nvidia down 8%. Okay, I'm losing 14% of my money right now, okay? And I'm still thinking this is a good buy because I'll see 140 sooner or later. But this time around, write my words down. I'm going to sell Nvidia at 140, and I'm going to get in lower than 134. And from there, I can plan on whether I want to hold on to this position till the end of 2025. Because I feel like 134 is a significantly high average cost for me. And if you're above 130, try to come down by dollar cost averaging or just hitting that target like I'm going to do. Okay, so risk-free investments definitely have higher potential returns, but you have to put more time into the stock. I'm going to put more time into my charts. I'm going to put more time into watching the stock grow. Okay, I'm down 14%. I could be up 14%, right? If I get in at 120, 122 and sell at 140, 142. So keep these things in mind, okay? Safe investments, these provide stability. Keyword is stability. You to see a balance all across your portfolio. It shouldn't be, you have more investments in, industry sector, retail, or industry sector, consumer services. Like, you need to have a portfolio that is balanced, right? Unless or until you are expert. If you are expert and you can say, I can dump $800 into Nvidia because I have did deep research on Nvidia, and I've seen the stock down from, let's say, before the split, down at $83, let's say, right? And I have been around the stock for a lot of years, and you have that type of research, then that makes sense. But if you're a new investor, right, have a diverse portfolio. For example, I have investments all the way scattered across my portfolio, and I'm not, currently it's a rough ride. I can only call 2025 a bad or good year towards the middle to end of 2025. Right now, it's a rough ride. I just got to shut up, put more money into things that are going to pay me back, and be very smart with where I'm putting my money. So, with my next investment is most likely going to be Walmart or the S&P 500 or Reality Income. But the next time I see Nvidia all the way up in 140, 145, I'm going to consider selling and getting that profit. I do not like that volatility. I'll be honest right now. This stock could go under $100. This stock could go 100, 110, 109 in the matter of hours. I'm being so serious when I say in a matter of hours. Look at this graph today. We start at 123. I would say, oh yeah, this is a nice day. We can go to 126. Let's test 130 again. Boom, 112. Like, what? There shouldn't be any type of impact. I know everything else across the market is totally getting dumped, right? But if I compare Nvidia to something like Walmart, right? Walmart just does its own thing. That's why it's so stable. It's a stock that's, been around for a while, and I tell you again and again, it has lived through the financial crisis. It has seen tough times, and it never fails. You see big dominant stocks that potentially can give you hundreds of thousands of dollars, right? These are the big volatility beasts. These can go up and down in a matter of hours, in a matter of days. So pick and choose your own battles. All right. By combining both, you can optimize growth potential while managing risk, creating a balanced portfolio that suits your financial goals and risk elements. Okay, financial goals could be anything. You want to invest to get more money to pay off your student loan debt. Okay, that's one good thing, right? So what is your financial goal? There's nothing wrong with just investing, but why are you investing? I currently want to invest just to make more money. I want to have money on the side. I want to build wealth. That sounds like a perfect plan to me, right? But in order to do that, what kind of approach are you going to do? Are you going to do a mixed approach like me, or are you just going to be the guy that sits back and does safer investments, like the S&P 500 or a stock like Walmart, or you have a dividend-paying stock? My dividend-paying stock is currently doing phenomenal, right? Next time around, if the stock goes back down, guess what I'm going to do? I'm going to add more money, but I'm going to get my payout sooner or later, which is going to be a big one, right? So it's very important that you guys, stay up to date with this type of stock as well. Building passive income is good, right? Building a long-term stock is good. Swing trading here and there is good, but do not get caught up into why you're investing. All right. Thank you guys for watching. Like and subscribe.